we've seen stuff as weird financed as, back in the Bitcoin craze days where
Oh
people
yeah.
were financing those Bitcoin mining machines.
Yeah.
One of our guys, was working on a deal for a dairy farm, automated dairy equipment,
Mhm.
cattle milking equipment. There's a lot of kind of stuff to me that seems strange that, in that specific industry, it's the norm.
Yeah.
But yeah, I mean, everything gets financed. You look around, there's a lot of really good, healthy companies out there, and the majority of businesses borrow, even the healthy ones, right?
Yeah.
Especially in today's low interest environment where it's cheap to get access to capital. Margins in business, traditionally bottom line margins can range, 6 to 7% up to 30, 40, 50% for some of the really, really good high margin businesses. And with capital, being between, 4 and 5% kind of on average right now. And a lot of the times, you're turning that capital 3, 4, 5 times in a year, some of these businesses. So
Mhm.
it makes sense to borrow if you've got the ability to grow with it, right?
We're people that were trying to get the Bitcoin, I guess computers, the mining machines, in a sense. What were they able to get financing for that?
Yeah, I mean, we haven't done anything like that recently. At that time, year and a half, 2 years ago, when it was the craze and Bitcoin
Mhm.
was worth a ton of money and there was a lot going on. I mean, that's high risk stuff. It's kind of private offshoot lenders that
Oh,
are, that
I
are lending
see.
to towards that. It's, banks don't get involved in that kind of thing. With all the anti-money laundering rules and all that kind of stuff, they're pretty careful to steer
Yeah,
clear
I
of
was gonna
anything that's
thinking so.
uncertain like
Yeah.
that. But yeah, there are lenders. I mean, I don't want to say there's lenders out there that will finance anything, but if there's a deal that makes sense and there's a business case to be had, and traditionally, if a business owner is coming to us, you know, they've thought it through, they've planned it out, they think they can make money on it. Traditionally, pardon me, there's going to be somebody on the other side that is willing to lend the money,
That
right?
agrees with what they've already come to
There's
conclusion. Yeah.
there's always a price that people will pay. I mean, somebody comes in and says, "Oh, to go bit mining." We don't have to talk about Bitcoin the whole time. I'm not an expert in Bitcoin by any means, but somebody comes in and talks about looking to do Bitcoin, and
Yeah.
the lender's going to say, "Well, for me to be comfortable with this, with the fluctuations in Bitcoin, if I'm going to give you, whatever, $50,000 for this machine, I need to be paid back in the next year because I don't know what's going to happen to the fluctuation of Bitcoin and and this and that, and to compensate for the risk that I'm taking on, I need 15% or 20% or 30%, and whatever." The lenders are willing to do, especially if you're going into that kind of private lending world, eventually the rate might become too high where for the business owner it doesn't make sense to do it anymore,
Right.
in which case a deal doesn't happen, right?
Right.
In which case the business owner needs to kind of start maybe retweak their idea or figure out the plan a little bit more to make it less risky or what have you, right?